Hello everybody, this is Luke Starr, founder of Hilltop Capital Advisors, and today I have a presentation on income investments. For more on this presentation or to check out some of my other videos, you can send me an email at starluke@gmail.com, or you can visit my website at hilltopcapitaladvisors.com. So let's jump right in here. There are really just 5 basic types of income investments. You have CDs or certificates of deposit. There's bonds, equity income, alternative investments, and what I call option-based income investments. CDs are an income investment option. Really, they're for investors who are looking for an absolutely guaranteed income. The biggest problem currently with CDs is that they have extremely low yields. 1-year CDs are around 1.25% interest, and 5-year rates are around 2.3%. CDs really aren't a good investment currently because they're basically allowing you to lose money slowly due to inflation, which is around 2 to 3% per year. Bonds are the next option for an income investor. Bonds have been a historically good investment, usually 5 to 8% return on the 10-year Treasury bonds, but currently those bonds are under 2% in yield, which means that whenever the Fed decides to raise interest rates again, you're going to see a decrease in value in bonds across the board. So really not necessarily a good investment at this point, A, due to the low yields, and B, because there is a lot chance for a loss of capital. Equity income is our next option for income investors, and equity income comes from the dividends of common or preferred stock, and current yields on common shares usually 3 to 6%, and most preferred stocks yields about 5 to 8%. Although it does provide decent returns, we have to be careful in which investments we choose, because stocks have significant market risk, and we need to make sure that we are not taking on excessive risk just to get a 5 to 8% or 3 to 6% yield. Next, we have alternative investments. There's a multitude of different investments that fall under this, but the 2 I want to focus on are really real estate investment trust. Some of these are private companies, they're private placement. Other ones are publicly traded on stock exchanges. These basically invest in business properties or residential properties. They package them together and then sell these to investors. The average returns on these currently are 7 to 8%, so a good alternative to bonds or CDs. However, a lot of these have significant leverage, and if the market were to go down, they would see an even greater decrease in value due to the leverage. And the other alternative investment option is limited partnerships, which some of these once again contain real estate. Others are oil and gas drilling interest. These investments can provide high rates of return, excess of 15 or 20%. However, they're also highly leveraged. Most of them are very illiquid, and if something adverse happens, the investor is going to see a significant loss in value. Finally, we have options-based income strategies. This is my preferred strategy for creating a steady stream of income, and I use this strategy usually to generate 10 to 14% annual returns while trying to minimize risk as much as possible. This strategy involves very little in the way of risk, because only about 20% of the account is actually used for trading, and the other 80% of the portfolio is either in cash, money market, or very short-term duration, high-quality bond ETF, or something very liquid in the bond market. The next question comes is, how do I do this? Well, it really comes down to just math. If you want to generate an annual 12% return, you need to basically average 1% every month. So I'm able to generate a 5% return on 20% of the portfolio, and thus 5% times 20% is 1% of the entire portfolio. Is it really that simple? Well, yes and no. Yes, because it is very easy to generate a 5% return with just 20% of your portfolio using options. We can actually generate much higher returns if we are right, but it's not that simple because it is the stock market and there's nothing that is guaranteed. I use call and put credit spreads to accomplish this strategy. However, you can't just walk out and sell any old call and put options and expect to walk away with a 10 to 14% every year. There's a very specific process that we have to follow in order to maximize our results. So to wrap this video up, I just want everybody to understand that you can get the results you want. You just need to have the right approach. I can help you achieve your goals and get you a great rate of return with an investment that is both safe and fully liquid. I base this off of the business model portfolio. This portfolio I developed after years of studying and looking at the markets from a different perspective. So I hope everybody got something out of the video, and if you want to get more information on the business model portfolio that I've developed, you can download the white paper at my website, hilltopcapitaladvisors.com. You can always shoot me an email or give me a call. I'm always willing to talk, and I just want to thank everybody for watching, and there'll be more videos to come.